Wells Fargo CEO warns of severance costs of nearly $1 billion in the fourth quarter as layoffs loom. Wells Fargo CEO Charlie Scharf said Tuesday that though staff turnover means that company will likely book a large severance expense in the fourth quarter. And I quote, "We have seen turnover come down, and so because of that, we are likely going to have more severance than we otherwise would have anticipated. We're looking at something like $750 million to a little less than $1 billion in severance in the fourth quarter that we weren't anticipating just because we want to continue to focus on efficiency," Scharf said during the Goldman Sachs conference. Whoa, that's a big number for severance. When you hear that, guys, and the media wants to tell you that everything's perfect and everything's fine and that the interest rates are not doing anything, there is an underlying banking crisis going on here. There's over 50,000 layoffs happening in the banking sector that's not being put out there. You'll get some of that information here, but that's not being put out there in the mainstream media. That expense is an accrual for worker layoffs and relocation that Wells Fargo expects to make next year, according to spokeswomen for the bank. Wells Fargo had 227,363 employees as of September. Under the previous leadership, employees had fanned out across the country. Now Scharf wants them near one of the bank's office hubs in San Francisco, New York, Minneapolis, St. Louis, or Charlotte. If workers don't opt to move, they may lose their roles, according to a person with knowledge of the situation. So here it is. Come back to the office or else. Now that the pandemic is behind us, a lot of these big employers are saying, you got to come back. This remote thing is not working for us. We're not getting production, or peace out, see you later. You got to bounce. We don't want you here, right? This is what we're seeing right now in the market, and it's really interesting because this article is talking about the banking sector, which the banking sector is going through a crisis. History will show that in 2023 we had a severe banking crisis that was kept on the low and the media didn't put it out there, but we will be looking back and saying, holy smoke, that was a severe banking crisis that occurred in 2023. What do you think about this financial decision, and how might it impact the bank's future trajectory and the broader industry? Leave me your thoughts in the comments and let's discuss. And this has been your weekly business brief. I'll see you guys next week. And remember to like, subscribe to the channel to keep up with the latest business update. Peace out.